Hello traders, welcome to FreeFX. Today is Wednesday, the 2nd of December. We have a ton of event risk, and I'd really like to state that at the moment my trades are in a state of flux because there is so much going on. They're trying to really get a sense of how I'm positioned in respect of the market is quite tricky, really. So let me try and describe what I'm going through at the moment. And I've been watching one of my trades on this pair. Now, the pound has been punished by the markets because the Bank of England has been really heavy in rhetoric against raising rates. So really, we've had a lot of speeches and plenty of opportunities that have been missed for the Bank of England to try to save the pound from plummeting as it has been, and yet is decided that it wasn't concerned with that. In fact, there was a suggestion that the pound was too strong and that it is affecting retail, etc., etc. It's affecting a number of things, the recovery essentially. So, but it's not as straightforward as that. Okay, don't quote me. It's not what the governor actually said, but there was a suggestion that the pound was too strong. Now, if we show you the pound there, you can see what's been happening. Now, this is today, so I'll talk about today in a second. I'm just going to show you the day chart, so you can see that that's okay. So where we were, 2015. Okay, so we came down from the 172, and in early 2015 there was a sense of recovery, and then it got as far as 160 almost, okay, 159 something, and then we've now come down to just below today. This is today. We've pierced the level of 150. Okay, this is 150, and today you can see the big red candle. We come down to 149.50 almost, pretty much. Now, so this kind of past few sessions, we've seen the pound making a bid for staying, above 150, maybe progressing further, but really is starting. If you look at the day chart from here, just make it a little bit smaller, you can see that for October and November, it's sort of in the short term a bear trend is forming. Now, where this is going to go, I don't know. But the point is that the pair that I'm watching the most has usually historically been in strong correlation with the pound, with the Kiwi, not the pound. So the Kiwi US dollar has been the driver for this pair's extraordinary run from April that I've talked about many times. So I'm not going to go into it today, but I'll put it on the day chart so we can see further back enough to see that we have made it up to 235, hit the 100-day moving average back here in the middle of November, and then we've had this correction again taking place back down, and we're just currently below or just below or fighting to get under 225, and we can see that we've been on the 225. I just actually yesterday extended this line. I had it just running for here, and I extended it because we're back to where we were here in October. And then we bounced back then. So we stuck between 225 and 235. That's a 1,000 pip range. So we're in a range. Okay. At the moment, we are in a range. The bigger picture, obviously, is that here's a 200-day moving average, currently at 2.22. So we're still above it. We're under the 100-day moving average. So we're kind of between these two averages. And of course, they are lagging indicators. But the 200-day moving average on a day chart is important. So as long as we're above it, we could still say that this is a bull trend, okay? Or that we shouldn't go short, or that if we have a long position long term, we don't need to panic yet. So, or at least we have to consider that we might rethink our position should this go below the 200-day moving average and stick to it and continue to stay below it for a significant time. Of course, we are coming up to a lot of event risk. We have next to tomorrow, we've got the European Central Bank, possibly and quite possibly looking at sort of data from the Eurozone, in terms of GDP and growth, is possibly updating its QE program that was introduced earlier this year, and that will have an impact on markets generally. But certainly December is a lower liquidity market because December is the month where books are squared because Christmas affects obviously openings. We've had a number of things. We've had Thanksgiving. We have basically the grinding down of the financial year. For some countries, financial year is from April. For some countries, it's from January. But at the end of the day, a lot of the contracts will expire. So it's not just Forex, it's other financial assets. Anyway, squaring of the books is, understandably for Western countries, 31st of December, end of the year. And well before that, this will be a matter of finishing off, not on the 31st of December, but possibly even now. So we're starting to see the escalation of event risk into a low liquidity environment. As we know, just by the definition of that situation, that any move will be amplified 100 times. In other words, if the Fed raises rates on the 16th of December and there's a low liquidity market, what's going to happen? Well, let's take an example here with the Kiwi US dollar, which is the parent pair for the pound Kiwi that we were talking about a minute ago. So, very interesting here to see what happened today. At this time, 1:15, we had the ADP employment data. This is a proxy for the non-farm payrolls data that comes out at the beginning of the month. So this Friday, the non-farm payroll data will, John Kicklighter of DailyFX once did a study of the correlation between the ADP data that comes out a few days before the non-farm payrolls data, and a lot of the time they are pretty much very, very similar, very close. So when you see an ADP data like today, this is what came out at 1:15, non-farm employment change, previous 196,000, this is for November, forecast 190, so it's forecast to be less, but it came out to 217, so very bullish, very positive. And then at 1:30, Janet Yellen spoke, and before her, another member of the Fed actually spoke about the appropriateness of the timeline for the Fed to raise rates. So it's been really a bullish day for the dollar, and it's sort of more confirmation that we are on track for a December rate hike. And let me show you what happened. So this was the release of that ADP very positive data for employment, and this came down from the high was 0.6655 and the low was here 66.35. Okay, so and then it retreated all the way back. So the Kiwi dollar survived this. Then Janet Yellen started speaking. I didn't actually track what she was saying. I went to dailyfx.com real-time news feed. I couldn't see anything as time went through. There was no kind of release of commentary. She's speaking again later today, I believe after 5 o'clock. So that may be reported. But anyway, I couldn't see. But what you can see from the price is that there was no kind of big reaction at 1:30 when she started speaking. This is only going about 15 pips, so nothing big. So we started here, retreated, and what we are starting to see, if we put it on the hourly chart, okay, we are starting to see that from yesterday evening, so just before the agent session, we were touching the 0.67. Now this comes off the back of an important break, so put it on the daily chart to show you where we are. This is the 0.67 that the Kiwi dollar has been sort of battling with for quite a long time. This goes back to this bear trend, came down to these levels, 67, went through it, stopped at 65 for a long time. This is a daily chart, okay, so we're going from middle of July to Black Monday, so-called 24th of October, so that's a month and a half, or a month or 2 weeks, was stuck in this 200 pip range, broke through, down to 0.6250, stopped there for again about the same time, then broke back above 65, back above 67, and it's come back down into this range. So we're back again between the 65 and the 67. So really, we haven't made any progress from the middle of July. That's 4 months, 4.5 months. Okay. Now, this really means that we don't have, from the Kiwi, we don't have direction to push something like the pound Kiwi above these levels, so back to the highs of August, okay, 2.24, 2.45, 2.46, those levels. So we are waiting to see whether the dollar is not strong enough at the moment, obviously, because any rally coming from the dollar is short-lived, as we saw today. We need to really wait for the Fed rate decision on the 16th of December. However, we have other event risk coming up. So I'll show you next week. We have 2 rate decisions. One on the 9th, and that's from the Reserve Bank of New Zealand at 8 o'clock. And then the next morning, or rather midday, we have it for the Bank of England. Now, the Bank of England is not really going to move on interest rates until well into 2016 by all accounts. So we know that this is potentially a non-event. Okay, we've had many inflation reports recently from the Governor of the Bank of England and the Chief Economist for the Bank of England, the Monetary Committee. We know that they don't see this as a timely position to be raising rates now. But if the Bank of England is looking at the Federal Reserve and watching to see what they do on the 16th of December, and watching also the market's reaction to that, I think that London and New York have a strong relationship, and that goes beyond their own timeline. So if one moves in a certain direction, it is, in my view, more likely that the other one will be encouraged at least to feel more confident than currently to move, at least to be the first to move. So if America, which is the bigger of the 2 partners, should move in that direction to be tightening and to be pro hike, then it is likely that the Bank of England will at least rethink its own timeline, or at least not putting its own interest rate rise so far into the future. But we don't know this. But what we certainly do know is that the Reserve Bank of New Zealand is forecast, as you can see, to cut rates by 0.25%, so a quarter of a point, and that is a strong possibility because although the last global dairy trade auction that was yesterday came out positive, over 3% up, the previous 3 were quite negative, and that has had an impact on the expectation. Also, the housing bubble in New Zealand is one that macroprudential tools have not really, like the loan to value ratio arrangements, have not really tackled in a fundamental way the problem of housing shortage and building programs in Auckland and migration and housing needs and this sort of bubble of prices going up, etc. This is a problem, a headache for the Bank of New Zealand, and so they try to tackle it with various measures, but I think that it may come down to lowering the interest rate to discourage prices going up. But I don't know what this will mean for the future, because it may be that there'll be a rate cut now in a December meeting, but then that will be the last one, and then they'll raise rates in January. If that were the case and they made it obvious, this would have very little impact on the New Zealand dollar. So really, I think the Fed rate decision on the 16th of December will be possibly overriding all of these, because everybody's looking at the Fed for the next market moves, and that will be a market moving event. So sentiment at the moment is really dependent on the Fed rate decision on 16th of December. So we are really just playing a waiting game until then. I hope you enjoyed the video, and I will see you shortly in my next video. Thank you very much for watching. Take care and safe trading.